Everything is opening above the initial indication, and of course we had LegalZoom pricing at 28, opening at 36.75. We are waiting for it to. Oh, there it is. It just opened here at 16.65, as you can see there, after pricing at $14. So Tyler, we have priced 213 IPOs in the first 6 months of the year. That is an all-time record. Normally, that's what you do in a full year, and we've got 6 months more to go in that. We've got about $70 billion that we've raised overall. This is about as golden moment as you can think of. If I had one thing for the traders to throw out to them, the returns, the average return on an IPO this year has been 26%. Here's the problem. All of the gains are in the first day of trading. 24% of that 26% is in the first day of trading for all of these companies on average. What that means is the institutional investors are the ones making a lot of the money. If you're a retail investor and you're buying in on the first day, you're probably not capturing anything like those kinds of gains. But still, if you're an institution, you're going to be very, very happy. There you see Didi Global. Tyler, back to you.
All right, thank you very much. So, Pete, let me turn to you on the topic that Bob just raised there about the relative performance of IPOs this year, 26%, but most of it on the first day. Are you a person who would jump in on Didi, for example, today or not?
Didi is interesting, Tyler, for me, because of the fact that, you know, when you look at what's really been going on, and Bob touched on a lot of this, but when I look at a lot of what's going on with these IPOs, they've been reducing how much they're actually putting out there. We've seen some of the numbers. They've had to price them a little bit lower than maybe expected initially. And we've seen some pretty interesting movement. To Bob's point, 26% on the first day. But then after that, we've seen a little bit of that pullback. So I think opportunities are there. Actually, most people are probably not able to get the IPO on the IPO pricing. And so that 26% is probably unlikely for a lot of folks to get. But the reality is you still have opportunities afterwards. As a matter of fact, I bought 2 last week that were after the IPOs themselves. I bought Bright Health, which is an insurance healthcare world. Mm-hmm. That's where they put themselves. And then I look over at the second one that I did, Sprinkler, which is a SaaS company that I think was way underpriced. And it's shown me that I've been somewhat right on that one because of the fact that after they priced, after it started to move around a little bit, it's made a pretty significant move to the upside. Now, today it's pulling back a little, but I look at some of these names and I look at where could they go and what does the competition look like. And I think in some cases, it literally looks like there is lots of room to the upside because of how they've traded initially in the first, call it, maybe 48, 72 hours after you get past that initial phase of going through the IPO itself. So that's something that makes it interesting. On this one with Didi, if it actually didn't trade real well, Tyler, come tomorrow or the next day or even in the next week, I'd probably get a lot more interested in the stock.
Yeah, priced at 14, opened 16.65. Joe, would you be a buyer here or not? Is this not your kind of merchandise?
Ride-hailing? No, a ride-hailing, I'll buy Uber. Yeah. I'd even buy Lyft. I'm not going to buy Didi here in particular with Chinese regulators cracking down on these technology giants with all these antitrust actions. So, no, I don't have an interest in it. $100 billion was the peak valuation. It's coming in, obviously, well below that. I think investors are sharing my same sentiment. Yeah,
as Deirdre pointed out, it's that layer, that extra layer of complexity and regulation risk when you take on one of these Chinese companies these days.